This week I built 7.4K profit on the FTMO Phase 1 account, taking it from 100K to a peak of 107.4K. I executed some of the cleanest trades. I used the pyramid strategy. I read price correctly all week. On Wednesday, I tried to rush to make 2.6K to finish the phase, and I oversized. I breached the daily loss limit by impatience. But the story doesn't end there. I want to show you what happened next, including a personal eToro trade that covered the cost. Let's get into it. Welcome to the Displacement Diary, documenting my trading journey, one trade at a time. On the left is the Nasdaq weekly chart from last Sunday. I told you price was going to work its way from the to the 187.5% to the 200% of this fourth quadrant of the Fib projections. And on the right, the framework worked. You can see price worked its way into the upper half of the fourth quadrant. The week ahead analysis was correct. Price did exactly what the higher time frame structure said it would do. That's the point of doing this every Sunday. A quick look at the US dollar index to the Nasdaq correlation. The US dollar was bullish this week, and this volume imbalance acted as support, pushing price up. And when the dollar strengthens, Nasdaq typically comes under pressure. And on Friday, that's exactly what happened on the Nasdaq there. It sold off. What I want you to notice is that, which I'll cover later on in the slides, is that there is a 4-hour market structure shift that appeared that gave the clue to the drop on Friday. On Tuesday, CPI, I had a clean trade. So the chart is numbered to show you how the trade developed, from number one. But I'll just narrow down to the close to the trade itself. So I saw that price closed below the new week opening gap low for the first time with a body. You can see there were no bodies there. There was the first body close below, and I took a short after the market structure shift. I took a short there, and that was in London. And then later on in New York, I saw that price went up, respected the new week opening gap 50%. And on a lower time frame, as soon as price, this is the hourly chart, as soon as price closed below this bearish fair value gap, I added more to the trade, targeting the 50% of this bullish fair value gap, and that made me 3.4K. So going into Wednesday, the account was sitting at 107.4K there. Phase 1 target is 110K, which you can see there. I needed 2.6K more to pass, and that is why I made a mistake. I decided to try and get the remaining 2.6K in one session, and I oversized, which is overriding the protocol that I use, and subsequently I breached the daily limit of 5%. And this is what stays with me. The account was still in profit of 2K, but a rule is a rule, and sizing up to reach a target is not the discipline that's needed to be profitable in trading. So therefore, the lesson there is for me not to chase the target, but to just follow the protocol. Now, here is something I want to share with you, and I think this is one of the most important parts of this week's story. After the FTMO challenge was breached on Wednesday, I entered long trades on my personal eToro account that evening, and this was based on the same higher time frame bullish bias that I had for the whole week. So I entered a long somewhere around that time after price pushed up, respected that bearish fair value gap. When price respected that, then I took a long on Wednesday evening, which I held on Thursday into Friday Asia time. And during the London session, when I saw that price had made that market structure shift there, I collapsed the long, taking the profits, and I waited because that was a signal for me that price was about to drop. I was also looking at the US dollar index, which was going up the whole week. So that told me that something was amiss there. And then I saw price create that market structure shift there and creating that bearish breaker, which is the last down close candle there. And at that point, when price went up and came back up, created this doji, respected that bearish breaker. I positioned myself for shorts, targeting these relative equal lows. And my take profit one was there with the take profit two at the relative equal lows because of this bullish fair value gap which was respected there. I was anticipating that it could be problematic there to pass through, so that's why that take profit there at the 50%, at the this was at the 70.5% of this dealing range. So that's typical of the market maker sell model. Before I conclude, here is the eToro screenshot from that platform, and you can see looking at the dates there and the time when I entered the trades. So starting from the bottom, that's on Wednesday, holding the trades, giving me those profits, and then this is where I was shorting the market on Friday. So now, 4 lessons I'm taking from this week. So number one, the daily loss limit is non-negotiable. Whatever it takes, never breach it again. This is the first time that I breached it. Number two, never size up to chase a target. The position size 2 exists for a reason. Trust it, even when you are close to the target. Then number three, this is an important one. Funded accounts are discipline enforcers. The rules that protect your funded account, that is the daily loss limit, the position sizing, the drawdown management, those are the same habits that make a personal account profitable over the long run. One prepares you for the other. Then number four, finally, the skill is proven, the discipline is the final piece. And for what's next, I'm looking at the market carefully, no pressure to jump back in. NQ needs to show me what it wants to do at these fib levels. We are close to the 200% fib. USDX strength means I'm cautious and I'm waiting for the daily chart confirmation before making any decisions. If this honest breakdown helped you, please subscribe and share it with a trader who needs to hear it. I post the week ahead every Sunday and the weekly review every Saturday. Nothing here is financial advice. This is my personal trading journey for educational purposes only. Process over outcome. See you in the next video.